So what I would suggest is that we briefly just do a run-up, like just get the people to know, where you come from and where you're going. Because I really like to have the distinction before crypto, what you were doing, and what do you bring in the crypto space. So maybe you want to start.
My name is Ivan. Thank you very much for coming in here. I'm the Chief Product Officer at B2 Broker Group of Companies. So we provide full turnkey solutions for different types of fintech businesses. By fintech businesses, I mean crypto exchanges, crypto brokerages, traditional brokerages, banking, and by the turnkey solutions, I mean we provide full set of components such as the CRM, the cryptocurrency payment gateway, the trading platform, full set of integrations, the liquidity provision, of course. And when the client comes to us, we are purely B2B sector. When the client comes to us, we basically provide them with fully branded white label solutions of such business. So they need to take care of the marketing, of like basically launching into the market. And yeah, so their time to market is absolutely like efficient. It takes like a couple of weeks to set everything up, brand everything up. And so we are industry since 2014, and we have a specific project such as B2B Pay, which is the cryptocurrency payment provider, which is also integrated with the full set of our solutions. And it allows the businesses, any sort of businesses, to start accepting crypto.
My name is Michael Sung. I'm a digital finance venture builder, I call that. Make a lot of partnerships with blockchain infrastructure and critical digital finance infrastructure companies focused on sort of regulated, sort of institutional type. I take these building blocks. You can think of it as the financialization layer for Web 3.0, and we venture build new products and strategies off of that, right? One of the notable companies is a company called Free Flow Finance, focused on blockchain interoperability to allow CBDCs and regulated stablecoins to do trade settlement, okay, for real world applications. And I'm also the Chief Strategy Officer for a company called Zanata, which has a very unique two-way ledger that will allow a payment receipt in addition to a payment, and that can very much simplify the implementation of bridges and prevent hacking and simplify smart contracts and things like that.
And what was your background before that? You were in payment as well, or?
I've been always a serial entrepreneur, focusing a lot on various types of ventures. Actually, back in the days, semiconductor, but these days, bridging China to the West in digital finance.
And so Khaled, I know already that you've been more than 20 years in traditional banking payments. Can you tell us now what was your background, where you're going, where you are at the moment?
So it's indeed a pleasure to be with you all here. Thank you very much. My name is Khaled Muharram, and indeed I've been 23 years focusing on payments, 10 years which I used to manage the Swift regional office for Middle East, North Africa, and another 13 years which mostly on retail payment. You just name it, issuance, acquiring, remittance, etc. So this is where I was. Today I'm working with WhatsPay. WhatsPay is an ecosystem platform to enable B2B, which is banks, regulated entities, to offer issuance or acceptance. Apart from that is definitely CBDC and remittance.
Fantastic. So I will, start right away. I think there's a lot of things that happened in our industry where last year it was a massive body blow to the psychology of our industry. Let's face it. And basically crypto was always the bad guys in the news. And eventually with what happened the recent days and then SVB Bank, we see that it's not only crypto that is failing, but there is also some things to be, I would say fixed on the traditional finance aspect of things. But then when it comes to crypto payment or payment in general, like, how do you see the disruption that came to crypto with payments, and what is better versus the existing versus what we had until now? Maybe you want to start.
Sure. So for crypto adoption, I think it has to start with CBDC, which is the central bank digital currency, to grow and scale. Today, crypto is used to buy, sell, etc., but it's not used in the mass. It's not used in our day-to-day operation. It's not like the credit card or the prepaid card that you are carrying in your wallet, or even a wallet payment that you have. So eventually I see regulation will bring the usage of crypto within the ecosystem. And as you have said correctly, the past few years we have seen turmoil not only in crypto indeed, and it's happening yesterday and the week before in the US. So even regulated financial entities face struggles and challenges. The main thing for me that banks will not disappear, banks will still be there, and they have to play a role within the digital asset platform. Many of them already took some initiatives, like JP Morgan as an example, but it needs to be more scale and more growing to the mass, to the B2C.
No, I firmly believe that digital currencies is going to radically transform the international monetary system as we know it. I write frequently about this. I think a key issue is interoperability, the ability to connect different blockchain ecosystems together, allow the proper clearing and settlement. Recently, I think there's been a lot of turmoil within the stablecoin industry. We saw what happened with USDC not being losing its peg and things like that, which was quite astounding. Clearly, that's going to have a regulatory pushback and require much more accountability with these type of things. But I think that's going to happen. So these are growing pains for stable coins, and I think they'll come out stronger. Now, in general, I think CBDCs are kind of like a multi 3 to 5 year time frame out from real adoption. China leading the world in this kind of stuff. Talk to the PBOC officials on this. They think it's going to be multi-years before they can actually get any adoption themselves. So CBDCs will change the world, but it's not a first mover. Stablecoins in the interim will fill that role. Stablecoins is roughly $110, $120 billion market cap these days. But if you think about it, mostly for DeFi and Bitcoin settlements, still in the crypto world, right? And I think there's going to be a 100x opportunity when we can start to clear and settle transactions for remittance, for e-commerce, for trade, right? Trillions of dollars, right? And so there's a much higher bar. There needs to be more regulation. The G20, IMF, everybody's getting in on this. So I think, within a few years, there should be a more regulated framework for this. Hong Kong notably has put some guidelines down. Literally, it's the central bank holding the treasuries instead of a bank that can fail. So I think the industry is moving in the right direction.
Sorry, may I ask you to repeat the question because it's kind of like close in my head.
So I would say, what type of disruption you see that the crypto, the payment in crypto has brought versus TradFi?
Oh, okay. So regarding, so you mean the difference between the advantages of the crypto payments against the traditional sets of, yeah, sure. So I think one of the most important things about crypto, it's the cost effectiveness. And I can actually bring an example during the recent events that they were happening with the stablecoins. The Binance CEO issued the statement which says that we'll be converting BUSD into the native cryptos. And actually, after that, he transferred $980 million in crypto by paying $1.50, and the transaction took 15 seconds, 20 seconds. So that's definitely what the traditional channel, the traditional ways of payments lack, like inability to process transactions automatically with low fees and at a high pace. And of course, apart from that, the main challenge for crypto would be, of course, I have to agree here, the adoption. I think right now around 5% of the whole population is actually using crypto, is actually holding crypto. But as you can see here right now in the recent events that were happening with the US banking collapse and basically what happened with the BTC, the increase to the main, the increase of the price, which actually was led to people, moving from the traditional payments into the cryptocurrency. And yeah, that's what we're going to see. I think we're going to see more and more adoption of the crypto payments throughout the industries, that's for sure. And actually, businesses are required, and I'm going to talk about this later with about the regulation. Right now, the main challenge for the cryptocurrency, it's a regulation, because in different countries, it's regulated in a different way. And I think MiCA is the closest step, the MiCA, the document that was issued by the European Committee, it's one of the closest steps towards the common regulation, where each and every country will need to face the same rules, will need to face the same, opportunities and challenges. However, this will be able this will enable, banks, traditional settlements to actually introduce themselves to the market, because they're not doing this right now. Not because, they don't want to or something. It's because they don't have the necessary level of regulation towards the crypto.
You brought the regulation, and I'd love to have also this gentleman's view about regulation in crypto payments.
Yeah, I think in general, has to be worked out, but sort of, I think the key here is like when you talking about replacing traditional, cross-border payments. When we're talking about cross-border payment, we're talking about two different regulatory environments and doing a cross-jurisdictional transfer, maybe across different technical platforms. So I think that the standards, best practices, and importantly, how to do so, compliant to the regulations on both sides have yet to be worked out. So I think that's really where the next challenge is. I think each regulatory framework within, say, a country is pretty clear. So the internal payment system is consistent with the local law. But once you start crossing over, I think that becomes very, very difficult to do. The other thing is, again, going back to Zanata, we're looking at a lot of very interesting legal issues. For example, things like trade finance, right? When you digitize trade, right, and you have to think about the legal implications of that and whether it actually has legal standing in the law. Those type of considerations are now cooked actually into the layer 1 blockchain, and so therefore we can be much more efficient with those type of things.
Sure. Maybe just to, as much as I agree to Michael on the stable coin that it will play major role to drive the industry, but however, I don't think we should underestimate the CBDC, because today itself, 80 central banks around the world are testing CBDC. SWIFT have announced last year in October that it will start already operating with few central banks to test the interoperability, which is basically one country issue CBDC, how it will be accepted in the other country. That's another challenge. So the settlement between two central banks, SWIFT is going to play a role for it. And once the regulator have a role in digital asset, and this coming to the regulation point, once they have a role in that, then regulation will be very clear, including the fiat side. Because at the end of the day, if we talk about retail payment, the merchant at the end of the day, or the guy who will off-ramp, he needs to receive fiat. He doesn't want to hold stablecoin forever. And even if he holds stablecoin today and transfer it back to his vendor, to his supplier, whatever it is, the cycle will always end with a fiat. And without a central bank regulating the fiat, scalability will never be there. But what I like to also acknowledge what Ivan have mentioned, Mecca is a great example to standardize the regulation around the full Europe. And I'm sure other regions will take from Mecca some standardization and copy that, because you don't need to invent a new thing. So this will standardize, and we will have like an ISO 20022 within the crypto industry around the globe. It eventually have to reach there.
I want to comment on this because what you're saying about CBDCs is still what we would call wholesale bank-to-bank settlements, mostly at the stage, right? So that certainly will be eventually replaced by SWIFT ISO 2022, whatever, and it's a very important part of the ecosystem. However, there's new opportunities. We're still thinking out of the box. Why do we even need a bank at all? We've certainly demonstrated very recently over the weekend that the banks holding your deposits may not even be a good thing. The concept of self-custody of your assets is very interesting. And also the concept of being able to do cross-border retail payments, retail, low value, direct business to business, wallet to wallet, may not need a bank at all, but still regulatory compliant with KYC and things like this. I think those are new optionality that will provide massive financial inclusion. And so I think it's the complement of these things, of breaking the sort of typical boundaries between the banks and the traditional banks and the sort of non-bank financial institutions. This should be a very interesting, evolving story.
I love this debate. And just one more comment.
But I'm very happy. We like debates to elevate, right? So
Just one more comment. So you say still KYC, AML, sanctions, screening need to be there. So somebody has to do it. You don't want to like to call it a bank, call it anything else. But it has to be an entity which is...
Absolutely.
So eventually for me, it's the same meaning of a bank, a regulated entity supervised by a central bank, because you cannot avoid, and this is very interesting, the transaction of the multi-million dollars happened. It has to be filtered. You have to go through anti-money laundering. You have to go through that sanction screening. You have to filter through PEP, which is politically exposed person, because one single mistake can destroy an entity. The penalties when it comes to sanction screening is in billions of dollars. It can destroy your industry. So if you are not very careful, and you can call it any entity you would like, but you have to go through the process.
Yeah, I actually very much agree with this. I can even bring you the case of our own payment gateway, because we have like multiple licenses, obtaining multiple licenses, including the license in Bahrain. We have the license in the European Union. And actually, when the MiCA came, we were completely, we need to change the structure. We need to completely, and with our own payment gateway, for example, we have 3+ integrations with the KYC providers. We cannot, allow any, darknet transactions coming in. Apart from this, before even obtaining this product, you need to process through the KYC as the business in order to obtain the solution and actually, audit your own transactions. However, and there is even like one more example, inside the MiCA, there is like a clear reference to the travel rule, which basically states that, the sender and the receiver, like the provider of the sender and the provider of the receiver, they need to exchange the details of the sender and the receiver itself. So that brings actually another level of transparency in the cryptocurrency, whole world, because right now it's just the address from address to address, but on this level it will be more of a person, this person sending to this person. This is the history of his own transactions, and the business is fully aware of who is processing the transactions, through which, what is the history, the background. So yeah, I completely agree that those are the levels that will only get, higher and higher in the cryptocurrency sense. The regulations, it will be strict. However, when the regulation comes, the adoption, I believe it would just go way up, way up. People will start obtaining cryptos because it's cheaper. It's quicker, even if you're sending BTC, it will take like 15 minutes to reach the confirmation. With XRP, it will take a second to reach. And there are like so many, like features, for example, like Binance, there, even introduced like Binance user. You don't need to pay the blockchain commission. You're just sending the crypto from one address to another address, from one user to another user. And in here, actually, one point that I wanted to point out, that you said that in the end, some people still need fiat. And again, a great example of our payment gateway, because we do provide, full choice. You're either obtaining a settlement in fiat as the business if you want to stick, because the traditional like cryptocurrency eventually will become an ultimate alternative payment solution for all types of businesses. The traditional ones will still be there, because the banking is evolving. Take the example of the open banking. It's a great example of how the banking systems are, evolutionizing, apart from this, bringing, again, more and more transparency to it. So yeah, and regarding the B2B and Pay, we provide either for crypto exchanges, if you want to get the crypto and settle it, because you're having the risks and obligations towards the customers in crypto. They deposited you in crypto. And if the price, rises twice as high, you need to pay them twice as high. You can settle them in stable coins, in, fiat currency. So yeah, like my general point is that, yeah, the regulation, it will become stricter. There will be more and more adaptation of crypto. And yeah, there is much more to, to see what's going up in the future.
So that you speak about the future, and that's great. And we're going to wrap up with that. What you guys are seeing as the hottest trends in crypto payments, and can you unlock it for us?
Maybe just to comment very quickly, yeah, I know the time is up already, but very quickly, blockchain is a great technology. The only problem, I think, which is a misperception, that people relate blockchain to directly equal to a crypto. Blockchain is far beyond that. Blockchain could be tokenization. We did a project tokenizing minerals, as an example, which has nothing to do with crypto. Crypto is a great user experience, However, there is many use cases on blockchain. Blockchain is the best in the world to track data because it's block zero till today. Database, after 5 years, 7 years, it will disappear. You cannot keep data for longer than that. So it's the best technology. The question is how to use it correctly and then how to use it within a regulatory framework. So to come to your question, which is, again, very quickly, I think stablecoin, which I agree to Michael on that, will be a major role to drive the crypto payment in the coming year.
I will add that I think we've now, blockchain has been around for about 12 years now, over a decade, and we have seen rapid improvements in transaction processing speeds and security and efficiency for these type of things. Next layer blockchains coming in are certainly going to be institutional grade to support, say, real-time payments for the whole world. So I think this is the time, this inflection point now, where we're going to see a flip from pure play crypto into real world use cases. Again, things like remittance and trade transactions, digitizing trade finance, and these type of things. So I think that, everything's come together in a perfect storm. The technology is maturing, the legal frameworks are finally coming online, and the industry adoption is going to happen in earnest. So I think overall, there's going to be a new phase of digitization of value going forward. So this is very exciting.
Yeah, I actually completely agree about that, because crypto has been around for like a decade, almost decade and a half. And as I already told, the adoption is extremely low, yet the knowledge of crypto is extremely high. Almost everyone knows about crypto. And right now, as I already stated with Mika, we are at the first big step towards the global regulation, because it is required for the government and the central bank to actually agree on the scope of those documents, on the scope of those regulatory documents, how they want to monitor, how they want to transact, how they want to see how crypto works inside their country and even throughout, countries under the single agreement. And in there will be much more, market players. There will be much more adoption. Even now, you can, go to some shops and pay them with crypto. However, with the and I completely here agree with you again. A new level of blockchains will be coming out that will be serving not just Bitcoin as an asset plus the utility token in order to store and gain value, or to transact it in order to pay something. There will be much more utility behind those cryptos, and of course behind the stable coins, because we've seen the recent situation with the USDC, the depegging. But if we're thinking about it, it got depegged because of the transitional system. So in the end, when there is more regulation, when there is more rules and understanding of how people are actually using it, yes, there will be much more into crypto usage, and there will be much more adoption. And yeah, I think here everything will be, crypto and crypto oriented only.
So I will just add one thing, is that one component or one use case we had most recently was the fact that crypto payment managed to literally save lives. You look into like donations that were made in Ukraine or in Lebanon, how it works and so on. And I think we can be grateful of that. So, well, thank you, gentlemen, for today. It was good to have you on stage. Thanks a lot.
Thank you.
Ivan, you were saying, and I'm going to challenge you on this. You said that kind of knowledge of crypto is great now. It's not. It's great amongst us. It's like, it's not, and we're sitting here in a conference about Web3. We're a certain breed of people. We're not the everyman, So I would disagree with you on that. But so usage is one thing, but I think knowledge still has quite a bit of the way to go. And the other thing I think I wanted to talk to you about was it's incredibly interesting what you're saying about kind of real world value, because today crypto has really been a speculative market trading instrument, and until it is, until I see it in Marks and Spencer's or Starbucks, to be able to pay, what's the tipping point for you?
Well, I think if you look at just cross-border payments, right? It's a multi-trillion-dollar volume, right? And there's an Oliver Wyman report that says that $120 billion worth of costs that can be saved if you use blockchain and digital currencies and things like that. So I think it's where the pain point is the most, right? So for example, for us at FreeFlow, we're trying to do trade corridors, like say between places in and out of Africa where you can't get access to US dollar. SWIFT costs a lot. I mean, literally you have to bribe the bank official to stand in front of line. And then after you get the privilege of getting US dollar, they rape you on the FX fee. And then you hit SWIFT with 3-day transactions and locked up working capital. So there's the pain points associated with those type of use cases, which are going to be the ones that convert first, because they can leapfrog into instantaneous payments.
Yeah, because I mean, when you're talking about Africa there, it's like, I think it's adopting Web3 faster than any other continent. But I think it's very interesting. I was in Kenya recently, and mobile money is just, mobile money is everything, absolutely everything.
Within country, right? So I think the new opportunity is cross-border, out of Africa into Europe. Yeah. That is still a super pain point right now.
Technical knowledge, of course, there are like few. The tipping point, like the main tipping point of basically a crypto acceptance for me, personally, it's the fees that you are paying to the vendor that you are processing the cryptos with. So in comparison with, for example, the vendor who is accepting MasterCard card or Visa, you're paying them like what, 6-8%, maybe like average, something like this. For example, with our solution, you are paying 0.4% on all incoming transactions. And outgoing are free. As was stated before, again, in order to, withdraw from the vendor, you need to, organize the SWIFT. If you have SEPA, then you're lucky, your money will come in like no time. Again, like with the SWIFT, you will pay too much money in order to just transfer those funds, wait for those funds. With the crypto, the settlement is immediate. Like you can, accept cryptos at a very low cost to the vendor, and then just, the settlement is immediate, and you will be able to withdraw your stable coins at any time.
Yeah, I'm sorry, I'm going to stop, I promise. I could talk about this forever, but I completely agree. And what you were saying as well, Michael, about moving money. I mean, this is a game changer for some businesses, because where you need some markets in LATAM and Africa, where you need a local partner, the biggest problem is getting your money back out, So this is where crypto makes a difference.
You see, technology is not the challenge. Today, we developed an ecosystem for acceptance of crypto. It even have a chargeback or a refund. The MDR, which you just mentioned, typical scheme charge 2.75 to 3%. The charge is far less. So the challenge is not in the technology or in the process, because it's already built. It's available. The challenge lie down with the regulator, because without the regulator, and the same, like in Africa, you can do the domestic payment through the mobile because the regulator did regulate this activity. Without the regulator regulating and have a clear guideline to the financial institution how to accept crypto, like you mentioned in Starbucks or whatever it is, it's not the technology, it's the center.
Because DeFi and crypto is all part of traditional. It's not separate. It's a part of the whole environment.
And I believe strongly that you will see the banks themselves in the coming month, year, maybe 2023 end or next year, you will see the banks allowing their customers to buy and sell crypto because they have the best platform. It's already KYC customers, so they have a perfect transaction monitoring. They go through the full regulation process. The reports to the regulator will be there, and they will allow the merchants to accept crypto.
Well, not just the banks, but some payment processors like PaySafe, for example, they have a fantastic fiat crypto solution. So there's a lot of there's a lot of processors and payment companies coming into it. But we better stuff, and it's like I could keep going. I'm going to hand it back to Cinderella to wrap up the panel, and I'm shutting up now.
All right. No, I think we're good for time already. But thank you for that. Thank you,
But it's interesting discussions. I lose sight of the clock. That's why I'm back.
Thanks a lot.
Okay, guys, that was awesome. Thank you.
Thank you, guys.